Welcome back for my final morning report chart analysis video on Tuesday the 8th of May with me, Richard Bear, market analyst at Hantec Markets, looking at gold, which has continued to sort of hold on to this support of the key low of the range around $1,300. However, there is sort of a seeming lack of ability for the gold bulls to really get control. They can't get traction in a recovery. Last couple of days you've seen the market just rolling a touch. Yesterday's session sort of arguably bit of a spinning top candle stick, and today we've seen the markets just drift back lower again, back towards that 1310 mark. 1308 initial support, you could argue, above that sort of range floor, which was the low to 1301, but I've always taken it as sort of 1300 as a big round number, big important psychological level. But you look at these momentum indicators, MACD lines sort of stabilised a touch, but the stochastics are just stuttering in their recovery, aren't they? RSI rolling over around 40. So the fact is that it just looks like it's a real sort of hardship for the gold bugs to really gain control of this. And you've sort of seen a move above initial resistance at 1315, but 1325 is still big resistance overhead, and 1318.90 was yesterday's high. And again, around that sort of 1318 level that we saw on Thursday. So the market is struggling to really gain traction. It's sort of moving sideways, you could argue, on a near-term basis. But 1308, if that were to be lost, then again, that would put pressure back on the lows. You've got the momentum indicators on the hourly. At the moment, sort of RSI is holding up above 40 on the last sort of few sessions. MACD lines basically hovering around neutral. It's sort of pretty much on a knife edge, sort of crossroads area, I think you would say. But the bulls being unable to really gain control of this market in a recovery situation is a bit of a struggle. So yeah, this overhead resistance, overhead supply around 1321 from these old April lows. And obviously, as I said, on the hourly chart, you've got that 1325 area. So it's the overhead resistance is still pretty big and preventing a recovery taking control. And I've spoken previously about this these bear crosses on these moving averages. They don't look great, do they? So yeah, it's a bit of a sort of a concern that sort of negative pressure might be building once more. So with that in mind, I wish you good luck in your trading today, and I will speak to you again tomorrow.